Here are two of the most common mistakes I see investors make when buying their first investment property. The first one is buying in the wrong market cycle. Now, this is an easy mistake to make because naturally we feel more comfortable buying in markets where growth has been strong in previous years. But in actual fact, what we should be looking for when investing in property is what markets have the potential to grow moving forward. In recent years, Brisbane, Perth and Adelaide have been such strong performers, but are they the right place to buy for the next 3 to 5 years? Now, having strong growth in years gone by does not mean you've missed the opportunity entirely, but it's really important to start to understand what is happening in those markets that will either lead to them continuing to grow or maybe lead to them sort of starting to stagnate. Now, we've seen this happen historically. There were periods of time when no one wanted to invest in Brisbane, everyone wanted to invest in Sydney, and that typically came off the back of Sydney performing well and Brisbane being a bit more stagnant. Now, fast forward to now, and purchasing in Brisbane at that point in time was the better call to make. So it's really important as an investor who's entering the market now to understand what options you have, but also understand which markets provide you with the best potential moving forward. The second mistake I see a lot of people make is purchasing properties that are cheap rather than properties that represent really good value. This is often dictated by them targeting a sort of portfolio goal of owning multiple properties, and often that means limiting property values to a lower amount so that they can achieve that objective of buying more properties. Now, in theory, it sounds great to have a lot of properties, but in reality, it can be a bit of a headache. And it also begs the question, are you better off holding lots of low value properties or better off holding fewer, stronger value properties that are in better locations with better demographics and better fundamentals? Now, it's our view that we're better off holding less properties, but at a higher value and better quality assets. And that leads us to buying really good quality properties in market cycles that we feel are most favorable to achieving growth moving forward. So if you'd like to find out about opportunities that exist like that, reach out to the team today and we'd love to have a chat with you.